Hey, welcome back to YT Finance, and today we're going to talk about Tesla's TSLA stock price targets and predictions, specifically their $3,000 price target by Cathie Wood. So we're going to talk about if Tesla's TSLA stock can actually reach this price target, and if it can be achieved, we want to know when Tesla will hit $3,000 per share. Then we're going to move on and talk about some of Cathie Wood's newest investments, or the stocks that she's doubling down on. So we're going to discuss three major stocks that Ark Invest has been buying lately. If you want more videos like this one, or you want more Tesla stock news updates, remember to like this video right now, comment your thoughts down below about Tesla's price targets, subscribe to the channel for more videos like this one, and now let's get right into today's stories. So Cathie Wood has been sticking to her TSLA $3,000 price target for some time now. Even though she has decided to sell some of her Tesla shares, she still stands by that in the long term, Tesla is going to hit $3,000 per share, and I tend to agree with her. And this is no surprise because Tesla's TSLA stock is Ark Invest's #1 holding, so we can clearly see Cathie Wood's conviction for this stock. And analysts tend to agree with her, and they think that this is more of a 5-year price target, specifically in that 5th year is when analysts think that this will be achieved. And this is due to Tesla's unmatched growth potential, their very large margin, and very little competition from their rivals, because Tesla has the clear first mover advantage, which has put them loads and leagues ahead of any of their competitors. Tesla is also rushing to improve and integrate their infotainment services, which allows their drivers and users to access things like TikTok, play Sonic the Hedgehog video games, and they're also going to roll out a Starlink satellite internet connection to their cars. There are also talks of Tesla planning to build and make their own smartphones, and I personally think this is kind of a jab at Apple, because as we all know, most likely, Apple is working on their own electric vehicles, which should be released in 2025. So, kind of tongue-in-cheek here, Tesla is now going to invade the smartphone space, which is what Apple is most known for. But again, we're going to get more information on this and how serious Tesla is about this in the future. So, an analyst says in 5 years, Tesla will have significant subscription services similar to Netflix or Disney+. In addition to the Starlink launch, autonomous driving and even insurance products, which they also offer right now, I believe. If we go down here, we know that eventually Apple is going to be a competitor to Tesla, and they're going to make a fully autonomous electric vehicle that apparently will have no steering wheel or pedals. Apple is known for their innovation, specifically in their user interfaces, and this is seen in their smartphones when they moved smartphones away from buttons to more touch technology, where there are no more buttons, it's just a screen. And I'm wondering if they're going to do a similar type of thing for electric vehicles. So there are going to be no mechanical levers or pedals or even a steering wheel, but instead it might be a fully new user interface. However, analysts are not worried about Apple and the Apple car because they really don't think that they can catch up to Tesla at this point. The analyst goes on and says, Apple is great at lots of things and has built a great business around the iPhone and its watch, but can it do the same with cars? Think about the growing pains Tesla has experienced. Does Apple want to go through that? They might be better off partnering with Tesla, and that would absolutely be fantastic news for both companies, causing the stock prices to most likely surge up, because that would be an amazing catalyst to find a way to add their tech in their vehicles. So that would be a fantastic partnership for Tesla and Apple to share some technologies, so we can have Tesla's technology but Apple's innovative user interfaces, which would be absolutely fantastic. Another analyst from CFRA agrees that Tesla stock can easily triple in 5 years, and even more so. He says, it's not an unreasonable target. A lot of things have to go right, but if you look at their guidance, they are planning for a 50% annual increase in auto sales, helped by the new Texas and Berlin gigafactories over the next decade, so there's lots of growth ahead. Another interesting projection for Tesla is Tesla wants to make and manufacture around 20 million vehicles annually annually by 2030, and that is a huge order because currently at this time that would equate to 20 times what Tesla is currently producing at around 900,000 deliveries and manufactured vehicles per year. Now, other analysts are not as bullish as the two that I just mentioned or Cathie Wood, and they take more of a bearish negative approach. They say that Wood and other super bulls, their price projections are way off, overhyped, and overhauled. Now, I personally don't agree with the bearish sentiment against Tesla because we clearly know that analysts have been wrong a plethora of times, specifically when it comes to Tesla. So now I do agree with these bearish analysts when they say that Tesla could experience a major pullback, and I completely am in line with that, and I agree that Tesla's stock price currently is too high and it has to pull back at some point. However, I don't agree with them that they think that the stock price will not surpass or exceed $1,200 in 2022, and I find that very hard to believe. Even though I believe it's going to pull back way below $1,200 per share, I think that in 2022 we might even see the stable price around $1,200 per share, but that just might be the bull in me talking. Lastly, on this channel, you know one of my favorite analysts from Wedbush is Dan Ives, and he is an EV analyst, and he says Tesla right now is a golden buying opportunity. Currently, Tesla has a stock price target of around $1,400 on the high end, and the analyst goes on to say that he sees Tesla reaching and clinching and obtaining 50% of the $5 trillion global EV software market by 2031, which would actually be fantastic. If you want Tesla's current stock price targets, the current stock price for the TSLA stock is $1,185. The low-end price target for Tesla stock by analysts is $67, which is very pitiful, and I don't agree with that. The average price prediction by analysts for 2022 is $849.92, so just say $850, and the high-end price predictions from analysts for 2022 range anywhere between $1,400 and $3,000 per share. Now we can go to the next article to see what else is Cathie Wood buying, because if Cathie Wood is correct about Tesla, she could also be correct about other stocks. So let's see what three major stocks that she's buying right now. So Ark Invest has recently added 2U, Teladoc, and Blade Air Mobility. My personal favorite out of these is definitely Teladoc, but I'm going to give you a rundown on all of these. First, I want to go over the ticker symbols. So 2U, the ticker symbol is TWOU. For Teledoc Health, the ticker symbol is TDOC, and for Blade Air Mobility, the ticker symbol is Blade, BLDE. For 2U, we're going to start with this company because I think this company has a lot of growth potential in it right now, and they are an online education provider of services that teams up with other colleges and even some trade schools, mostly for graduate students, and of course, they have plenty of partners with universities, numbering about 85, which is a lot. One of the best parts to me about this company is that they have had 9 years of consecutive growth of 30% or more, which is absolutely astonishing growth. However, that streak of 9 consecutive years of a 30% compounding annual growth rate is going to end this year because their current guidance for this year is anywhere from 21% to 23% top of the line growth. However, this is still very impressive. Now, I do have a caveat here because the 2U story would be even better, except right now they are unprofitable. This is not a profitable company. So before you invest, please make sure of that, write a note about that, and pay attention to that, because I normally try to stick with profitable companies unless the company has great growth projections. Now, no stock is perfect, but I do want to go over the current stock price, the low end, high end, and average price predictions by analysts. So the ticker symbol, like we said earlier, is TWOU. The current stock price is $20.77. The low end price target is $28 per share. The average price predictions by analysts for this stock is $44.10, and the high end price prediction for 2022 is $55 per share. Now let's talk about Teledoc Health, which is one of Cathie Wood's favorite stocks of all time. The stock has currently pulled back around 55% since the start of 2021, and as we are now in 2022, we're going to see if it will continue to fall or if it will decide to either consolidate or even start to rally again. Now, Ark Invest loves this stock, as I said earlier, and Cathie Wood continuously has been adding to her position in Teladoc even as the stock price is falling. She now owns around 11% of Teladoc's overall outstanding shares, which is a big deal. And I'm thinking if she is this confident in Teladoc, just like she is in Tesla, maybe we should pay attention here. Teladoc, what they do is they are a telehealth company where people can visit doctors, psychiatrists, specialists, and other medical professionals without leaving their home. They basically just have a video conference call or a telehealth meeting with a professional, a medical professional. And many people actually prefer this way of meeting with their doctor or any doctor because one, it's less intimidating, two, you don't actually have to go into the office and be around other sick or ill people, and lastly, it gives people convenience and time. Now, Teladoc expects to generate around $2.6 billion of revenue next year, which is up from $2 billion for 2021. So for 2022, the consensus is that they will bring in $2.6 billion. Now, I think they will actually have an earnings beat or a revenue beat for that matter, which is just going to add to the bullishness that Cathie Wood already has for the stock. By 2024, they are also projected to bring in around $4 billion annually. So it is surprising that Teladoc has pulled back so much, but honestly, that just gives us a better buying opportunity, but who knows if we are at the bottom yet. Lastly, I want to talk about Bladed Air, but before we do that, I want to give you some price targets. So the current stock price for TDOC is $94 per share. The low-end stock price prediction is $88. The average analyst consensus is $158, and the high-end price target for TDOC is $215 per share. Lastly, we can talk about Blade Air Mobility, and this company is almost like a transportation taxi service that uses helicopters. And this is not just going to be for the rich and famous people. I believe they kind of want to bring this technology to the masses because they think this is where the future is going to be. Currently, the stock is trading at single digits because it has fallen quite a ways. However, again, this could just provide some people with a buying opportunity, and because Cathie Wood has bought up this stock, she clearly saw this as a buying opportunity. So this company mainly solves the problem of traffic, and high friction areas of time-consuming car rides. So you can get someplace much faster by helicopter than you can by car, not even including traffic lights, traffic laws, and finding parking. Another cool thing about this company is that it has become a major player in human organ transport. So if someone really needs a organ very badly in the hospital and someone recently was deceased or passed away, they can use this organ and transport it very quickly and efficiently to the hospital that requires it. So I thought this was a very good move by Blade Air Mobility acquiring Trinity Air Medical, and that happened over the summer. I also want to add that Blade Air Mobility does not take up much space in any of the Ark Funds, and Ark Invest does not have millions of dollars into it, and this is most likely because the stock is very speculative right now with a market cap of around $600 million. But I do want to add that their revenue has more than doubled over the past year, and that's always a good sign. The current stock price is $8.81. The low-end price prediction is $13 per share. The average price target for the stock is $14.80, and the high-end consensus from analysts for 2022 at the end of 2022 is $16 per share. Lastly, we can look at two other stocks that Cathie Wood has been buying up, which is Robinhood Markets, and she has also been buying up DraftKings. So these are two stocks that she has been buying up very adamantly. For Robinhood, ticker symbol HOOD, she has bought up around 563,570 shares. That's worth around $10 million. Another reason why she has added more of this company is that the Robinhood stock has been crashing tanking. I had a video before it even IPO'd that came out that said that Robinhood stock would surge in price and then crash, and that's exactly what the stock price is doing. Currently, the stock price is down around 49%, and that's why Cathie Wood is buying up this stock currently. It currently trades at around $18 per share right now. The low end price prediction for this stock is $17, so it's actually almost met the low end price prediction. However, the high end price target for this stock is around $84. So that is a huge increase from $18 to $84, and this is again a 1-year price target by analysts. If we go over to DraftKings, and the ticker symbol for DraftKings is DKNG, and Cathie Wood and Ark Invest has invested around another $10 million into DraftKings. She has bought around 38,846 shares of DraftKings. So DraftKings' current price is currently around $27 per share. The low-end average stock price target is around $34 per share, and sometimes, depending on what analysts that you look at, it can go all the way up to $60 per share. But the high-end price target for this stock by the end of 2022 is $105. So it's no shock that Cathie Wood is investing, especially if she is bullish on these stocks. So going from $27 to $105 or $18 to $84, that is phenomenal gains. That is extreme growth. But I want to know what you think. Comment down below your thoughts on Hood stock and DraftKings stock. Subscribe if you are new to this channel and want more videos like this one. Like this video right now if you haven't already, and I will see you in the next YT video.